Hello and welcome to this session. This is Professor Farhat, in which we will discuss the written representation from management known as the rep letter. Now this rep letter you already saw in the auditing section of the exam, which is the traditional audit. And this is how you end up an audit. And this is basically we're wrapping up the audit. You would ask the management, you must, it's not an optional thing, you must ask the management to make certain representation in writing. So put things in writing, and this is what the written representation letter is. Same thing in a traditional audit. At the end of the audit, you'll tell management, provide me that letter. I want to make sure we're all on the same page. We'll do the same thing for a SOC engagement. We ask for this letter because we want to make sure we're all on the same page. In this session, we will talk about this rep letter, what's included in it, what should management say, and at the end of the day, they can customize this letter in any way, shape, or form. Anything you want management to say, you would ask them to state it in that letter. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today.
The first thing you need to know is it's a must. And in auditing, an attestation, must means specific thing. It means you have to. The service auditor, the auditor must get a written confirmation from the management of the service organization. And what is the purpose of this confirmation letter? Well, it serves multiple purposes. One is to verify the information provided to the auditor. So this is what you gave us. Tell me in the letter, this is what you gave us. Verify. Confirm the accuracy of this information over time. Simply put, what the service auditor is asking for. The service auditor, the auditor is asking the management to state certain things. Tell me that what you gave me, confirm that it's accurate over time. You're giving me the right information, the proper information. And what's the purpose of all of this? Is to help avoid misunderstanding between the auditor and the service company, the management. So simply put, the auditor is looking for this letter, asking management in their own words to tell us what they gave us. It's complete, accurate. We gave you unfettered access to information, to people, to data, so on and so forth. Now we're going to see in the letter what's included in the letter, but that's the overall idea. One purpose of the rep letter is, if you ask me what's the purpose of it, I would say for the auditor to cover their back. In case you are sued, you would say this is what they gave me, and look, they told me this is what they gave me, and I relied on this. So the auditor should choose who in management or the governance body to approach based on who's responsible and knowledge about what's being audited. Now, who should sign this letter? Someone who is responsible, someone who is knowledgeable, someone who was involved in the audit, understand what we are doing. So the written statement need to be dated the same as the SOC report and must cover the same topics and the time period reviewed in the auditor's report. Of course, because the letter is about the SOC engagement. Therefore, it has to be dated the same as the SOC report, covering the same period. And the auditor typically cannot release the report without first receiving this letter, because you don't want to release the report and management and something, eventually was discovered that was incorrect or not true, and management said, we didn't tell you this. Well, you want to get this letter first, having on record what management told you, what you relied on before you release this report. Also, if a subservice organization is involved, and obviously if a subservice organization is involved and we're using the inclusive method, that's another condition, then they must also provide us a written confirmation. Because again, they gave us information and we want to make sure the information that they gave us, they're standing behind it. They're not denying it. And how would we make them do so? Put it down in writing. This is what you gave us. And what did they give us? That's what we're going to look at the letter. What they would typically tell us or give us. So let's start at the elements of the written representation. It must confirm that management statements about the audit subject are based on correct criteria. So management, because remember, who decides on the criteria? Management. The assertions, management. So they'll have to say what we told you is correct. The criteria are correct. You have to state that all relevant information has been considered in the evaluation or measurement of the subject matter of assertion. So simply put, they took their time to determine their assertions, the subject matter, or relevant information were considered. All information that contradict the subject matter or assertion and any relevant communication from regulatory bodies, other external parties that could affect the subject matter has been disclosed to the auditor. And any information that could contradict the subject matter that we ask you to opine about or the assertion are provided to you. Why? Because I need to know if there's any contradictory information, and any information about these topics from regulatory bodies or other external parties also has been disclosed to you. Why? Because we want to know everything, how they came up with these assertions, how did they come up with the subject matter, if anyone already contradicted them. Well, we have to be aware of this. And this includes any communication received after the period covered by the assertion up to the service auditor's date. So here they are acknowledging up to the service auditor's report date. Acknowledge responsibility for the subject matter and assertion. Management will state we are responsible for the subject matter and assertion. For choosing the criteria used to assess the subject, also management is responsible for that. For determining that the chosen criteria are suitable for management objective, again, management is acknowledging that to the auditor. So in case anything happened down the road, we can go back and say, look, this is what they gave us, and they told us this in the rep letter. What else do they have to confirm? Management will have to confirm any event occurring after the period covered by the report which could significantly impact the subject matter or assertions. Those have been disclosed to the auditor. They have to confirm that anything happened. Remember, we had a session about subsequent event. They have to tell us if there's any subsequent event, they disclosed it to us. Also, the rep letter would state that management has given the service auditor full access to the necessary information and resources needed for the audit. Well, simply put, the auditor, they don't want to be in a position that say, well, we did not have this information. Well, why? Management gave us everything, and based on the information that we were giving, and this information is full access, we made our decision. So if management is hiding something, it's the management problem at this point. Also, the letter will have to affirm that management believed that any misstatement or deficiencies that have not been corrected, whether in the description or in the actual figures, are not significant either on their own or in aggregate collectively with respect to the subject matter. And the letter will have to state management did not correct certain misstatement. Why? Because they believe they are not significant. Management is telling you this. So if they did not do it, they did not do it because they believe it's not significant, it's not material, and they told us that in the letter. Also, we have to do certain confirmation about disclosures. All known deficiencies in the internal auditor relevant to the audit. Everything has to be disclosed to the auditor. All known deficiencies in internal control. They have to tell you this. Any known instances of actual, suspected, or alleged. Notice here the bar is very high. Even alleged fraud will have to be disclosed. Not even suspected, alleged. As well as non-compliance with laws, regulation that affect the subject matter. So anything about non-compliance, fraud, not even actual, alleged. Somebody alleged it, you have to let us know. Why? Because if they alleged it, they might have suspected something, saw something, we want to look at it. Also, any other information that the service auditor has specifically requested, such as changes to the service organization control, we confirm disclosure about this. Also, any instances of non-compliance, withdrawals, regulation, incorrected misstatement related to the service organization, which may also affect the user entity, especially relevant to SOC 2 and SOC 1 engagement, are disclosed. So we disclosed all of this. All of this is disclosed, and those disclosures are stated in the rep letter that we did disclose them to the service auditor. Additional disclosures specifically about fraud. Management must disclose to the service auditor any knowledge of actual, suspected, or alleged fraud committed by management or employees that could negatively impact, for SOC 1, the accuracy of the presentation of the management description of the service organization system or the achievement of the control objective, which is the suitability. Also for SOC 2, the accuracy of the description of the service organization system or the fulfillment of the organization service commitment and system requirement. Any suspected, actual, or alleged fraud that affect any of those, they are disclosed as well. Additional disclosures. Management must disclose in that letter to the service auditor any identified system incident that significantly impaired the service auditor ability to meet its service commitment, anything, or its service requirement. For Type 1 SOC 2, as of the date of the system description. For Type 2 SOC 2, during the period covered by the system description. Management must affirm that all significant assumptions used in calculating material estimates are reasonable for SOC 1. All estimates are done by management and they are reasonable. Tell us that. Tell us you made the estimate and they are reasonable. Now let's ask ourselves, what if management refuses to provide this rep letter, or what if management provides a rep letter, but we don't put a lot of weight in it because we don't trust the management? So let's take a look at these scenarios. What if management fails to provide any of the requested written representation? They refuse to confirm what we just talked about earlier. Or the service auditor has significant doubts about the competency, integrity, ethical values, or diligence of those providing the representation. For one thing, the auditor should have known about this before they started the audit, but nevertheless, now we are at the end of the audit and we suspect them. Or the representations are not deemed reliable. We really don't trust what they're telling us. We don't trust them. Although they're signing it, we don't trust them. What should the service auditor do under those circumstances? Well, one thing is engage in discussion with relevant parties to address the issues. Maybe the board of directors, maybe higher level management, to see what needs to be done. The auditor might have to reevaluate integrity and reliability, reassess the trustworthiness and reliability of those from whom the rep letter were sought or received, and consider how might this affect the overall credibility of the representation letter and the evidence collected. Should we take action? Yes. So if these concerns are not resolved satisfactorily, the auditor should take appropriate action based on the specific circumstances and the standard governing the audit. Simply put, we might have to kind of say we're not going to give an opinion, because we cannot rely on the evidence. So if the management does not provide the required written representation, it could lead to scope limitation. Remember, scope limitation means what? It means we could not collect the evidence that's needed to make an opinion. And part of the evidence is the rep letter. If they're not willing to give us a rep letter, this could be a scope limitation. We can't say anything. If these issues cannot be resolved, the service auditor might be unable to issue a standard unqualified opinion. We can't do that. And in certain situation, based on legal or regulatory allowances, the auditor may also choose to get out of the engagement altogether. You don't want to be associated with this company as long as law and regulatory standard would allow you to do so. Let's take a look at this multiple choice question from farhatlectures.com. In a SOC 1 report, management is expected to confirm what? All significant estimates are based on reasonable assumption. With this something we do when we are looking at internal control over financial reporting? I would say reasonable assumption, because reasonable assumption helps us determine figures, valuation. Well, I would say that's not a bad answer, but let's keep it to see if there's a better one. But I would say all significant estimates are based on reasonable assumption. Could be something that we do for a SOC 1 report. The organization will expand to new market in next year. Well, this is basically a marketing strategy. Is this relevant about any historical financial controls or processes? I would say no. I would say between A and B, I can definitely take B out because it has to do with expanding into a new market. It's a marketing decision. It's a strategic decision. It has nothing to do with historical financial information, because SOC 1 is about financial reporting, internal control over financial reporting. There will be no change to the management team within the next reporting period. For one thing, it's about the next reporting period. That's the period. And how can you just the next reporting period will take this answer out. SOC engagement, looking at internal control over financial reporting that already existent or happened in the past, we cannot predict. We never say anything about the future. So C is out. I don't have to explain more than that after you see the next reporting period. The financial forecast for the next quarter are aggressive but achievable. Really, the SOC 1 report is about passing a judgment about the financial forecast? Not at all. So basically what what I'm asking you here is, do you know what a SOC report is all about? Financial internal control over financial reporting. Which one would include, well, reasonable assumptions. When you make a reasonable assumption, reasonable estimate, that is part of the financial reporting. So therefore, the answer is A. What should you do? Now you want to go to Farhat Lectures, look at additional MCQs that's going to help you, whether you're studying for the CPA exam, Information Systems and Controls, some other professional certification, accounting courses, finance courses. Invest in yourself. Farhat Lectures is always here to help. Good luck, and of course, stay safe.